Hey guys, how are you today? I hope you're all well. It's Economics with Bonang. This is our 2025 paper, which is from Limpopo. We're focusing on our circular flow questions, so let's get right into it. Question 2, 2.1. Answer the following questions. 2.1.1. Name any two turning points of a business cycle. So we know that we have two turning points on our business cycle, which is the thrive and the peak, right? 2.1.2. Why is the value of the multiplier in a two sector model higher than of a four sector model, right? So we know that the size of the multiplier will be higher as there will be less leakages. So in our two sector model, there are less leakages, and in our four sector model, there's import included and taxation included. So that means there is more leakages. That's why the two sector model is higher than the four sector model, right? And then we have our 2.2. Study the table below and answer the questions that follow. Let's study our table. National accounts aggregate South Africa million rands, which is 2023. Summary of gross domestic product at current prices. So we know that current prices are nominal prices, so there are prices that are not adjusted to inflation, right? So we have our compensation of employees, net operating surplus, consumption of fixed capital. When we add the three, we're going to get gross value added at factor cost plus other taxes on production minus subsidies on production, which is equals to gross value added at basic prices plus taxes on products minus subsidies on products, which is equals to gross domestic product at market prices, right? And then we are done studying our table. As we can see that here they are using the income method to calculate GDP, right? And then we have our questions. 2.2.1. Identify the concepts that indicate the use of nominal GDP to calculate figures above. So current prices, as I've said, that current prices means that they are nominal prices. So here our answer is current prices. 2.2.1. Which method of calculating GDP is used in the above table? So as we can see, there was a mistake here. This was supposed to be 2.2.2, right? So they used income method to calculate the GDP, right? Point 2. Briefly describe the term gross national product. So gross national product refers to the value of all final goods and services produced by the permanent residents of a country within a specific period, right? And then we have our 2.2.3. How is gross domestic product converted to gross national product? We're going to say gross national product at market prices plus primary from the rest of the world minus primary to the rest of the world, then it's equals to our gross national product, right? Then 2.2.4, calculate the gross domestic product at market prices, show all calculations. So we're going to say gross value added at basic prices, which is 6,175,572, plus taxes on products, which is 730,506, minus subsidies on products, which is 17,341. So that is going to give us 6,888,737, right? Thank you.